Hi, everybody. This is the Bitcoin Critical Pulse. It's a show that I'm doing with Chris, and he will give you a small introduction. I figure we will do this for a few first episodes, because maybe new people tune in. But basically, me and Chris are coming from different angles. I am a physicist. He's more in the financial world, and so the entire idea is that we met each other because I was looking, and very interested in bringing science in understanding Bitcoin and the ecosystem. And one of the tools that I was looking at is what is called the log periodic power law. It is something that has been developed by this physicist, Didier Sornet. Is a French physicist, but he started from geophysics, and he developed some tools to find moments when systems are in a critical state. That means basically they are transitioning from one phase to another. And this could be, for example, an earthquake. He's a geophysicist, and he noticed a very precise pattern. Like there are very characteristic signatures that are happening just before this critical event. Like, for example, in the earthquake, you will see faster and faster oscillations that are happening before there is a major earthquake. Then he started to apply to what is called solid physics, where you study, for example, cracks in material, and then eventually he decided to apply to other type of systems, because this is what physicists do. We try to find analogies between different realms of reality, let's say, even if it seems so different, right? Earthquakes, cracking materials, and financial systems. Many people have resistance, thinking that humans don't behave like particles. In fact, there is this economist that everybody knows in the Bitcoin space, Amos, that one time he was interviewed by Lex Friedman, and he was saying, "Oh, people are not like particles." Well, there actually are, um, under certain circumstances, um, and this is what this physicist tried to show using this technique. So he identified times just before a bubble, for example, where people behave exactly in that way. They have oscillations in their behavior. It could be how fast, for example, they buy and sell. And using the same mathematical tools, he was able actually to make real-time predictions. You can do these predictions several days ahead of a crash. So I was very interested in bringing these in understanding Bitcoin, and I found Chris because one of the tools that I'm using is TradingView. But TradingView, it's very nice because it gives you all these financial data basically in real time, but it has limitation in terms of uh, let's say computational power, and also the different functions that you can use. And this is a very computational intensive calculation. So I knew that probably nobody used this approach that is called the log periodic power law. But then I was surprised that actually there was somebody that developed a tool, and this person is Chris. And in particular, I was very impressed by his description of the underlying ideas behind the log periodic power law. All these idea about that, as Chris will tell us how he applies this idea. Because from what I understand, um, he didn't really use the full calculations to calculate this log periodic power law, because you really cannot do it directly using TradingView, but use the spirit and the principles and workarounds that are giving us similar result. They are very consistent, but without going in full mode in calculating the log periodic power law. But anyway, so we got in contact with each other. We started to talk. We are coming from different background, but I'm very impressed by uh, Chris' understanding of these physics topics. Better when actually the majority of economic people or financial people that I discuss things with usually. So this is the introduction to the show, and we are presenting these tools to you to give you better insight into Bitcoin, because the power law itself, that are the models that I develop, the long-term power law, give us a kind of a bird view of what happens with Bitcoin, while these tools are more about the short-term moves that are happening, and it gives us, both different resolutions, a better picture of what happens with Bitcoin. Anyway, I will leave the floor to Chris.
Thanks, Gio. Can you put the disclaimer up, please?
Sure.
Thanks. So we're obliged to say that this is not financial advice. It's for educational purposes only. It's not investment or trading advice. There's no representation or accuracy or completeness, no guarantees. Trade involves risk, and past performance is not indicative of future returns. You are solely responsible for your own decisions. Please read the disclaimer that's on the screen, and having done that, we can move forward. Thanks, Gio.
Okay. You still want the disclaimer, or you're ready to?
No, we can go.
All right.
So my background is markets, and I spent about 30, 40 years inside the machine, trading, running desks, trading all sorts of different things. And really, these tools were born out of frustration, the frustration of tools and models and theories failing at exactly the moment when you don't want them to. And a disappointment and frustration with other tools that are out there that were built for another time that aren't really applicable in today's world. So I set about building an array of tools that you're going to see some of today. The first is the log periodic power law critical pulse, which I think you can see on the screen right now.
Chris, just a second.
Yeah.
Your voice is not super clear. Can you try the other volume setup that you showed me before? Something is wrong. I don't know. People can tell me from the
Is this
chat.
better?
So there is a little bit of an echo or something. Try again.
Try that. Is that better?
Much better. Yes.
Okay. So the screen that you have in front of you is the log periodic power law critical pulse, and it's different from other tools that are out there because it's not designed to render buy and sell signals in the same way that a moving average would, or RSIs, MACDs, any of the myriad of tools that you find out there that people look at when they start trading markets. What this is really trying to do is understand behavior. And it does it by applying the principles of the log periodic power law and breaking them into two states. One is a white state, which is basically when people don't know what to do. They're trying to figure out what to do in the marketplace. And the other is when there's a coalescence of conviction and the market moves with purpose in a particular direction. So it moves until it stops and re-enters one of these white states when there's a consolidation or an exhaustion. And this ties in very closely with the power law's notion of there being criticality when tension builds up in the marketplace. It's not sure which direction it's going to move, and it breaks out. So it ties in very closely with Sornet's representation of the log periodic power law. And what you see on this page is the log periodic power law critical pulse, which are these colored lines that you see here running in parallel, merging into white lines periodically, overlaid on Giovanni's longer term power law that projects the price of Bitcoin. The white line that you see here is the theoretical price of Bitcoin based on Giovanni's principles of applying the log periodic power law to Bitcoin. And we've overlaid the log periodic power law critical pulse so you can get a sense of what's going on. And I think everyone's pretty interested in what's going on at the moment. There's concern that we're going to run into a wall here at this $112,000 level. We might not break through. We might break down. People are uncertain as to what's going on in the marketplace as a function of that. I think that's the current vibe at the moment, isn't it, Gia? I guess. So,
sorry, I muted myself. I have some background noise, but yes, exactly.
Okay.
You got it right.
Okay, so last week when I had a bit of an issue with my computer and lost communication, we were at this point right here, which was the low. And how at that point we would have interpreted things based on this tool is that we're still in an undecided period. One of the faster moving critical pulse lines had suggested the market was turning down for a little bit, and we started to get these confirmation signals, these red dots. And subsequently, that's been reversed. The market's moved back up. There's still confusion. The orange crosses represent disagreement between the various signals that are generated by these parallel lines and the other components that go into producing the various signals that are rendered. But the bottom line is we're undecided. We've got the faster acting line starting to turn up, price starting to turn up. It's right at the theoretical price level of Giovanni's model. And the question is, where do we go next? And there's not really a strong clue from this daily chart at the moment that we see here. We can get comfort from looking at other time periods. So here's the weekly chart. Same story pretty much, still moving up, but right on the theoretical price line. The monthly chart, there's less information because there's less of these pictures, these data points to render, but you can see it's still strongly positive. So it's moved out of the white state and is starting to move up. The purple line here represents period doubling, which is price activity at a more frenzied pace and moving up. And that would represent what's going on in this period from the low in the daily chart that we had in here. And then if you go down into the lower time frames, one of the things you'll notice is that all of the patterns that are generated by the critical pulse lines repeat. There's more noise as you go down into lower and lower time frames, but the same structures appear again and again. And the confidence comes when you get a separation and then a confirmation of these two parallel lines from the white state, and then a proliferation of signals, confirmation signals in green, without a red one in sight until you kind of reach this level where there's uncertainty. And you get the orange crosses representing periods when the signals are disagreeing, and these patterns tend to repeat. It's a proliferation of red, a proliferation of green, or confusion where the signals are overlapping. And you can go all the way down to much, much lower time frames and generate the same sorts of signals and patterns. There's just more noise as a function of the higher frequency data that's going on. But I thought it would be interesting to try and get some clarity about what's going on here today. To do that, I'm going to share with you a couple of other tools that we've built that will be available shortly. This one is a temporal estimation, phase estimation program that we run that projects prices forward. So based on price activity and various analysis that we do based on the underlying data contained in these various indicators, we project price. And at the moment, we have a valid price that looks like it's been hit. It's down here at this. Let me just expand that so you can see a little bit at the 106, 345 level. So we haven't quite got there yet. It's come very close. But we also have two other valid signals to the upside in place. One at nearly 110, 800, and another at 114, 341. Now these signals appear with some frequencies. You can see to the left, they've populated and been validated or invalidated. And they probably hit somewhere 50 to 70% of the time, just depending on whether it's a shorter term signal, which would be designated by a P1, and they go all the way up to P5. And you can see that down here, we've got an old P4 signal at 95,500, which has not been invalidated. It's still live. So there's potential for the market to retrace to that level. But based on how I've seen these signals perform, we really need to kind of break through this, I'd say the 104, 3,000 level for these higher signals to be invalidated. So that would suggest that even though we've got confusion still pervasive with this longer term critical pulse line, the shorter term one's turning positive, the price action is moving to the upside. But is that enough comfort for anyone at the moment? So maybe not. So there's another tool we have, which is I guess you'd call it a scale invariant estimator. And it appears as these green and red arrows that are showing on the screen. And just to give you an idea, we go back a little bit. So in this last run up, you'll see that all through this period where there were pullbacks and the green dots disappeared, you had these scale invariant indicators suggesting that the trend was intact and was still moving to the upside. It ran out of steam once we got into this white state again, held up for a little bit, but gave up the ghost right in here, just as the slower critical pulse line was kicking in. Confusion reigned back and forth between the green and the red scale invariant indicators. And right now, since Monday, we've had a return of these indicators. So that's giving us some comfort that there's strength in this move at the moment, and we haven't seen anything suggesting that's going to turn around yet. So overall, on the daily analysis, we have this white state still persisting, but a number of indicators suggesting that there's potential for an upside move at this point.
Now, even what we were discussing, me and Chris offline, right? That we also want to give you, as the show continues, some ideas. Again, all these are not advice, financial advice. It's more like discussion of ideas, educational tools, and so on. But during this time, because I think this is one of, as a Bitcoiner, right? It's a different angle that we have, because Chris is more of a traditional trader, maybe doesn't understand completely, is getting used to it because, I'm orange pilling him to the anxieties of Bitcoiners, right? If we want to call them like that. I know that we don't have anxiety because we know that over a long period of time, Bitcoin is going up. But, sometimes we get a little bit frustrated by Bitcoin doing these things, where it's oscillating around a particular price, is not doing much. We are expecting more action. Well, you can actually use these moments for things like, for example, cover calls, right? We were discussing this with Chris just before the show, that there are opportunities here because, for example, you could use some of these targets that are creating, particularly the upper ones, or even the white line itself, as a point of reference. So you could say, for example, if you have already the underlying asset, that could be Bitcoin, or you could also, if you own any IBIT, you could do it with IBIT or even MicroStrategy. And we can actually show how these tools apply to IBIT because Chris actually developed. These tools are very general, but to make them work with the different assets, you need to spend some time to tune the parameters. And we focus mostly on Bitcoin and the Bitcoin ecosystem, like the different ETFs or treasury companies. And so in a certain moment, we can look at IBIT. But say you could use these, and we can go more in the details. Chris has a hard limit around 10 minutes from now. But next time, maybe we can go a little bit in the details on how to make these signals actionable, right? For example, with cover calls. And we can give you some examples. We can go more in the details next time. But how this chart looks like for IBIT, Chris, for example.
So this is IBIT. It's a little bit different. It's the same sorts of patterns are emerging. They're not quite an exact replica of what you see for Bitcoin, but we still have the same thing. And I really want to emphasize that there are two states. The market's either moving in a direction or it's taking a time out and trying to figure out what it wants to do. And it's kind of what we're looking at really is the behavior here. And that's giving us clues as to how we should be trading. So you may want to use this in conjunction with some other indicators or methods that you use to assess the market. But you can tell very clearly that there's a strong move underway when you get these parallel moves in these pulse lines in the same colors. Blue is just a continuation of a strong green move, and not quite as strong as the green move. And orange is the same for the downside move. Red is the stronger move. Orange is a continuation of that move. And then here we completely missed a white state. The market just completely decided at this point, after this moment of confusion, that it wanted to rally. So I don't know what that particularly was with IBIT at that particular point in time in the middle of May, but we had this result nonetheless. But the patterns are very similar and equally actionable. So in the prior example that we were looking at for Bitcoin, where we had this white state, and Gio's talking about covered calls, we know pretty well when we hit this white state that the market's going to persist at this level for a period of time. And that's information that's useful in how you go about structuring a trade. And there are indeed various option strategies, and we'll get into those a little bit later in some of the subsequent broadcasts that we do to discuss how to implement those. But there's information in this construct, this structure, this behavior that allows us to create strategies that can generate income from selling vertical or calendar calls against an underlying position you may have in a holding of Bitcoin or IBIT. And further, if you get into lower time frames and you're doing box trading or dollar cost averaging, these levels that are being generated are very frequently hit. So you can couple that with the either as an independent strategy or with the call strategy. There's a whole array of things that can be done here to generate income. And it's just a question of how often you want to be sitting in front of your screen trading, how often you want to implement the transactions, whether you prefer not to do it on a lower time scale. But the point is that for every time period, be it 5 minutes, as you see here, 1 minute if you want to go there, the same patterns, the same take a pause, take a breath, we don't know what we're doing, okay, now we've got resolution and we move one way or the other, occurs again and again. So there's a lot to be done here when you start to understand the behavior of the market and when this change of state from indecision to agreement occurs.
This is super cool. Yeah. Very interesting. Yeah, these tools are very different from the usual tools. And we have a list of them, right? So far, how many are using on this chart, in this particular example?
There's 3 on this chart at the moment.
What are the names? Can you introduce the name of these? Because you have very cool names of that.
So there's the log periodic power law critical pulse, which are these 2 colored lines you see here, and the green and red dots. There's a number of other features.
And again, tell me how somebody will use it. I'll summarize it one more time. The first one that you mentioned, the log periodic one.
So you'd use it to understand state change in the marketplace.
Yeah.
And there are a number of different ways of using it. I mean, if you're aggressive, you could trade just the lines themselves. So if you're just trading this fast-acting power law line, usually when you hit a white state, you get a very strong pullback, like you see in this bar right here.
Yeah.
And then when the market comes out of the white state, whatever the direction is immediately after the white state is the direction that the market usually heads for a bit until there's resolution. Here
so purple means down in this case, right?
Yes. So purple is a strong agitation in the market and price activity, and it's moving in the downward direction. So that's what occurred right here. You can see that move came down. Then we had some uncertainty as this other power law line came into place, and the market rallied. So that coincides with this faster one here showing movement to the upside. But we're still in this state of indecision. And you can see whenever there's movement in this faster state, faster log periodic power law, you can see that the price moves in sympathy with it.
It's very clear.
Yeah. So you can
And
use them in tandem.
yeah.
And then there are these other signals that come through. These green dots that you see are confirmations saying that
How do you call, what is the name of that indicator?
it's the same indicator. This is all, so
Okay.
the orange crosses, the green dots, the red dots, and there are other features as well that you can add to the chart if you want. So if you just wanted a background color that showed you when the market was in a positive state, you can get rid of all of the noise in these signals and just show that. Or you can just show the green dots, the red dots, the orange dot is confused. You can turn every single one of these components on or off, and you can have a cleaner chart if you want, or a more crowded chart with these various signals. So that's the log periodic power law. The colored lines, the white state lines, dots, the crosses, and other features that are not shown here at the moment.
Okay.
The second indicator that is showing is called the temporal phase indicator.
Temporal phase indicator. Okay.
Yeah, so it's really looking at time and phasing and a couple of other things to try and identify what the market is likely to do based on its cyclical action, I guess you'd call it. And it's making projections, and that's what all of these numbers are on the screen. So as soon as a projection is made, it gets displayed immediately above or below the bar where it's generated, and it remains in place until a new indicator is generated. So here, for example, you can see it says P3, that's the third phase indicator. It had a target price of 109,000. It was generated right here. It failed to get hit in these last 3 days, and there's a new P3 indicator down here at $106,500.
So tell me, what is the interpretation of these target prices? What do you mean with target in this case?
So the market's likely to be attracted to that level.
Okay.
And the next question is, with what sort of certainty? And the answer is, it varies depending on the time frame that you're looking at, whether you're looking at daily, weekly, monthly, hourly, 1 minute, 5 minutes, 30 minutes. It's different for all of them, but it's generally not less than 50% of the time, and it can be as high as about 70% of the time that it'll hit.
I see.
So if we go right down in time to 5 minutes, you'll get a lot more shorter time frame projections and targets, because there's more noise. So you can see here that there's a higher frequency of signals being generated and targets being hit in a tighter band. So you'd expect the P1, P2, P3 signals to be hit with higher frequency than the P4, 5 signals.
I see. Yeah, makes sense. Okay, and then you say there is a third one.
Yeah, the third one that you're seeing here is what I call the scale invariant dual indicator. That's these green and red lines, the arrows that you see here. And this is using a couple of different filters to understand the phase state of the market and what's happening with these power law lines. So it draws on a combination of information and really just says the trend's intact. So you can see all the way up here, as the market was rallying, that these green arrows were in place the entire way, even when the market was going sideways and even retracing a little bit.
Yeah, very nice.
It stayed all the way up.
Yeah, love it.
So they're the three indicators that I have here at the moment that I used to try and sort of figure out what was going on with price today. And as I said, we've got uncertainty with the power law lines. We've got some confirmations with the scale invariant indicator. We've got a couple of targets to the upside with the temporal phase indicator, but there's still a downside target here. And I just say, with regard to these higher prices, based on how I've seen these evolve, I'd say that if the market was to retrace to the 104,000 type level or a little bit lower, then these higher targets are likely to get invalidated. That doesn't mean that they're going to generate new targets to the downside just yet. or to the upside. It just means that price is going to continue to meander whilst it's in this white state that we have generated by the power law before there's resolution and conviction as to the new direction.
Good. Yeah, so and it's interesting because yesterday I was meeting with the other group I work with, and one of them likes to look at liquidity levels, and basically it was a very similar picture. And it's nice to see when different angles gives you convergence. That means
the confluence is a good thing. Although I have to say, confluence with traditional technical analysis is really just signal stacking. It's often
True.
variations on the same theme that looks like confluence. So if you had a Venn diagram of some of the older style indicators, you'd think you'd had confluence, but really they're just kind of saying the same thing using a slightly different language. This is totally different. This is looking at what's happening underneath the surface of price. We're not fixated on price in the same way.
Among the traditional approaches, I think liquidity is probably one of the best ones. But yes, I agree. This is much deeper, and it doesn't need to look at all these more superficial things. It's a deeper understanding of price action that is not much based on directionality, because the directionality it comes later, right? First, you want to understand, is the market ready for a move? That is this critical science, critical physics type of understanding, right? Because the direction is almost obvious once things are happening. Are we going up or are we going down?
Yeah,
but that is the critical thing.
We have these very clear breaks that occur, these very, very clear patterns that just occur again and again.
Right.
And when you've got that, it's pretty certain what's going to happen.
Yep. Okay, Chris, you told me that you have some conflict today. Maybe next time we can go longer, but I think this was a very good explanation of some of the basics, and also we have enough information. Basically, to summarize, we are still waiting for confirmation of a signal that is not happening yet. It could be up or down, but right now we are in this situation where basically the market is ready for some change, but the conditions are not there yet. And like I said before, this actually could be used because you could make cover calls. We can go in more in the detail next time, but me and Chris, we are looking at some possibility. Like, for example, if you look at there are some aspirations for IBITs in the next couple of weeks, July 14th, for example. I'm going to sell some cover called at $65, let's say. It's very unlikely because we are talking about a 12% change from now, from where IBIT right now it's 60, 70 something. So it's very unlikely that we go. What is your white line there for your white line is at which value right now? What is the value of a?
So on IBIT, it's 63.30.
Yeah, 63.30. So if you say 65 in the next couple of weeks, it's very unlikely that we go there. So that could be a good strike price for a cover call in a short term. We can go more in the details, but I wanted to give you a feeling of how you can use this period where nothing seems to happen to actually do something, like doing some cover calls, and you can learn about this. It's one of the things that as a Bitcoiner you can learn to do, because this is nothing new. We are going Bitcoin. It's typically does this. It spends a lot of time sideways, and then he has these sudden, very strong moves, these almost violent moves. So it's a good thing to learn how to use this inherent volatility in times when Bitcoin doesn't do anything to actually get more Bitcoins, in essence. So this is one of the things that we want to create as a value for the community. But anyway, unless do you have anything else that you want to add, Chris? Otherwise, we can meet.
I don't. The only thing I would say is that the website is close to being complete. I'd say early next week we should have access available for.
Do you have a link to the website? Maybe to tell it's you can see the the address here on the ticker, but do you want to show the website? Do you have in front of you? Okay. Otherwise, I can try to do that if I can pull it up. Let me see. Yeah, here it is. Okay, let me share it so you guys can see. It's a very nice website, and invite everybody to go there because actually, just give me a second. Okay, I'm going to share my screen. Here it is. Okay, yeah, this is our, and there is like a little box where you can go and write down your name because we are going to write actually a newsletter. We are the first issues probably will come up sometime in the middle of the month, next month. You can put your email here and you can learn more about the different indicators that we are developing. We have all these that are, some of them are already available now, some of them are in development. They do different things. They are very interesting. There is more explanation about everything else. But it's just a landing page right now. There will be more learning material. There will be more in-depth discussions. But right now, please write down your name, your email, so you can get our newsletter, where we will explain some of the basic concepts, but also give you an update. Another angle that we will also cover as we go along is macroeconomics, because actually that is something that Chris also is very knowledgeable. If you click in the web page, that is the other interesting thing that you can explore. If you say contact us, you actually I don't see the white paper anymore. Did you take out that link?
Yes, it's down for the moment. It'll be back up next week.
Okay, because so if you click here, soon it was there. Chris is still improving the website, but we have also a white paper, a couple of white paper that Chris wrote, and you can read them because it goes more in the details on the main ideas. Please visit the website and track the improvements and the evolution of the website as we work on it. Okay, guys, thank you so much.
Yeah. Gio, just before you go, I see there's one question about IBIT. Someone's asking if IBIT white shows a different structure to Bitcoin.
Yeah.
It's not really. I mean, firstly, it's a different instrument. Secondly, I haven't had a chance to optimize it. But let's just take a look here. So here's Bitcoin, and here's IBIT. It's somewhat similar.
Yeah. Let me switch to your presentation. Yeah.
Yeah. So here's IBIT. It's not massively dissimilar.
You will expect some differences, right? Because it's not really. Look, a few reasons. One of them that comes to my mind, that's something that we can explore. Bitcoin is traded 24/7, and IBIT is not, right? It's traded more like traditional stocks. There is some interference. Okay. Like a traditional stock, right? So that it's just during New York Times, and so that changes. Just that should create some differences, and it's actually a good thing that you see these differences. And also, the type of people that are attracted to IBIT versus the type of people that are attracted to Bitcoin. It's there are differences that should show up, but also similarity because we are connected to each other, of course. And the difference in similarity, these are opportunities, because actually maybe you can even find some way of trading one versus the other, or the other things like that. These are all tools that people can explore.
Yeah. So I would say that I've not optimized IBIT. for the tool just yet. I mean, all of these tools have different liquidity characteristics, different volume and trading, and other components that go into the critical pulse line. But if you look at the price action, it moves pretty accurately. I think with a bit of tuning, I can find the answer to your question specifically. But I'd say overall, it's not too dissimilar. If you look at Bitcoin, we had this big downward move. We had the same thing. The turnaround was a little bit different here, so it's not a white state per se in IBIT the way we had it in Bitcoin. Move up is the same. Scale is different, obviously. But it's going to be an input variable that's probably causing some of the dissimilarities that you're seeing.
Yeah. Anyway, guys, thank you so much. We will have another show at the same time next Friday, and we will go a little bit more in depth in how to use this tool for actionables, like maybe trading options or other possible things that we can do with them. All right. Thank you so much. See you soon.